Let's try and analyze and break down the Accenture numbers further. We have with us Sandip Agarwal joining in on the show. Sandeep, hi, morning. Thank you so much for taking the time out this early in the morning and joining in today. Sandeep, it seems like it's a bit of a mixed bag, right? While Accenture has lowered their revenue forecast once again, but the street is enthused about AI and what they had to say about it. How are you reading into the numbers?
Yeah, hi, good morning, and thanks for having me on the show. Yes, but you also know that markets are always forward looking. What they have cut is basically one quarter number in a sense, because the full year now implies 3 quarters almost are behind. So I think market is not taking it very seriously and don't want to punish the company for that. Market is looking towards what will happen next year, and I think from next year perspective, what you should always see in a tech company, because it is a quarter-on-quarter billing business, what is your exit rate? And if you do the maths of the exit rate for the current quarter, it seems that it is going to get a very strong exit at more than 2% growth. So I think that is what people are looking at, and that is the right thing to look at. Also, if you see the bookings and the kind of traction they are getting, as you rightly mentioned in the AI side, I think we are beginning of the execution cycle from services perspective. See the front runners like the Nvidias and the Alphabets, they have their run led by AI benefits. Now it has to boil down to the services, and then within services, first consulting and then outsourcing. So I think we are maybe 1 or 2 quarter away from it flowing down to even outsourcing. But because markets are forward looking, you can see a big run up even in the Indian IT services much before the actual numbers come.
No, but Sandeep, I take your point about the exit rate, but a lot of it is Accenture specific, because if you look at the commentary, they are saying demand environment hasn't changed. It's the ramp up of their individual deals and the fact that they had done a lot of inorganic acquisitions, almost 35 so far in the last few months. That is what is aiding their growth. How much of this should be read through for the Indian IT company and the overall demand environment?
No, so you are right that the growth has come, and Accenture's model is this only. If you see since 2002, they have consistently been acquiring small companies throughout their cycle. So there is no denial in that. But what happens when you bring these companies, integrate, and then you start getting the exit rate on that, because you are going to grow on those numbers. So that is what has to be looked at. So I think it clearly sends a very clear sign that the traction is picking up. And also remember, this is a B2B business, so it is not like a B2C business where you will see traction and it will flow down over a period of time. Here it is immediate, so the falls are immediate. If there is 1 or 2 deal cancellation, or there is some loss of momentum, or there is some conservatism, immediately you see a fall in the revenues, and immediately you see uptick also. So it is very hard to exactly time when it will happen, but these are early signs where you are seeing this kind of order book and all those things which clearly are showing you that there is some recovery which will happen very soon. And if it happens in the consulting side, then it will flow through in outsourcing with a quarter or 2 quarter lag. So that is the way it should be read.
Okay. So do you see the rub-off effect of this on other IT stocks also, or Accenture is different, other Indian IT companies are different?
No, I think we will definitely see rub-off effect for 2 reasons. One, some of the large names like Tech Mahindra, HCL Tech, they have lot to read from the Accenture numbers on particularly on the telecom side and the managed services side. So that obviously has a positive benefit for these two companies. And secondly, also these are the stocks which have not gone anywhere for last few quarters, and now they have become very comfortable on the valuation side also. So I think there should be some big benefits flowing into this kind of names which are reasonably valued. I am not so positive on some of the very expensive mid-cap names. I think there is some bit of cautiousness which should be seen in those names. But the large names which have not done at all well, they should do well in my view from here.
Right. Okay, Sandeep, great to have you on the show. Thanks for analyzing Accenture's numbers and what it could mean for the rest of the IT pack today.
If you like this video, then like, share and subscribe to ET Now.